Hi, we're glad to have you here today. I'm Phil Romano from Forbes Real Estate, and we're excited to talk to you today about multifamily investment properties. What you have in your hot little hands there is a financial snapshot. It's an attachment that comes with every property that we promote, that we preview, and we send out to you. So I want to take time to really describe this form. It's simple and easy to use, and if you're like me, that works. Complicated and hard to use is not in my vocabulary. So we've divided this form into 5 sections, 5 simple and easy to use sections that really goes from the top to the bottom, and then it provides a great analysis for you to make a great choice for a purchase. Number 1 is the income. What that does, it shows the makeup of the property in terms of how many units and also what the anticipated rent may be, or actually the actual rent may be, and it translates that into an annualized number. All the numbers and figures that we'll work with on this form and any of this financial snapshot will be based on annualized numbers. So just remember that. So section number 2 are the expenses. These are things fixed income, fixed expenses like property taxes, insurances, any professional management fees, any utilities that may be necessary to be paid by the owner, and those type of fees. Now, what's not in this are mortgage payments. It's really important that you know that, because all the snapshots that we'll promote to you will only be based on a cash purchase. If your goal is to actually finance that, we'll need to take another simple step in looking at what the rate of return will be after you actually have your debt service or your payments taken out. But in this simple and easy to use analysis, it's based on a cash on cash. Section number 3, very important, is the net operating income, an NOI. And what that means is that's really what's left over. It's important. So every figure that in terms of your NOI will really show what's left cash on cash on an annual basis. Because the net operating income is so important, that allows us to be able to look at 2 other figures, and that is the capitalization rate, or in short, the cap rate. That's important because it allows you to quickly determine whether this is a great transaction for you or not. The higher the cap rate for the buyer, the better. For the seller, the lower the cap rate. So whether you're a buyer or seller, it applies to you both ways. So let's just say that you had typically a local market area had a cap rate of, say, 8%. So then you could say to yourself, well, if I have a cap rate of 12 to 15%, then I have a better than usual capitalization rate and would be more exciting. If it's under that, you might say, well, what are the mitigating reasons why? Was it poor management? Was it too high a sales price? Or what factors go into that? Allows us to really say what makes sense here. Now, also, if you look at the bottom of section number 5, it kind of brings it all together. It's the crescendo or the punch of this analysis. And it basically says, looking at what you're doing in terms of other financial investments, let me just ask you a question. What is your normal anticipated rate of return on your investments? Let's say CDs, market monies, those type of things. For some people, we say, well, let's be energetic and say 5%. Well, the question at the bottom of the form, it says, if you had a return of 5%, how much would you have to invest in that account in order to get a return of that net operating income? It's a great question. So if you take a look at that, let's say you have a 5% return, and then you have a net operating income, let's say $7,000. That would mean for you that you would have to have $147,000 and change sitting in a bank account, earning day in and day out that interest to enjoy that type of return. And some analysis, you may say, well, if I have say a $70,000 purchase price of a property and I can earn that same $7,000, well, guess what? You say to yourself, well, could I leverage that $70,000? Or would I have to sit on $167,000 to get the same return? That's a question that you have to answer for yourself about your anticipated returns. So I want to take a few moments to talk about this paper. We're only a short phone call away. My number is 239-218-2441, and that's right here on my phone. You can call me when you have a question. You can also reach us on the web at www.swflhome.net. We're excited to have you here today. Take a look, answer questions, and live with passion. Bye.